Multiplicity has an investment strategy that's quite unique. We exclusively invest in special situations and private market fund secondaries.
Multiplicity Partners is a small investment boutique located here in Zurich. We are specialized in secondary transactions in illiquid and sometimes distressed assets. On one hand, we provide liquidity to sellers of these underlying assets. And on the other hand, we provide access to our investors into those assets.
Multiplicity has been founded back in 2010 as a spin-off from a larger alternative asset manager with a mandate to liquidate certain illiquid interests.
Writing off a position, either if it's your own corporate position or a client position, is never easy. But it's almost impossible if you don't know the reasons for the write-off.
Where you always must remember that the typical illiquid and or distressed asset that is in a client portfolio is a small part of the overall problem. So really we want to help them focus on their core business again.
We have developed into a firm that invests actively in such illiquid interest. We started back in 2016 with the first fund, LTO Fund 1, investing in such illiquid situations. Now we have developed this over the time and we're now at LTO Fund 3, where we're currently looking to deploy capital in illiquid situations such as private market secondaries, but also special situations.
Investment strategy, Multiplicity is really being a longer term and opportunistic investor. So we have an extremely flexible mandate where we can provide liquidity and do secondary transactions where others can't.
We're definitely one of the firms that has a very, very broad investment focus. We have a very wide net that we cast.
Not restricted by any geographic segmentation, by asset classes, by any other conventional restrictions.
At Multiplicity, we currently have three particular areas where we look for secondary investment opportunities. One is tail end real estate funds. Very much in contrast to the buyout space, you have little interest usually in 10-year or older funds in real estate. There is another focus really on troubled funds that were open-ended that then ran into trouble and had to suspend redemptions. Within the distress bucket, we also make direct investments. We are really looking typically at very illiquid situations, typically older liquidation cases. This can be Madoff situations, this can be Lehman, this can be Icelandic bank claims, and also then, some smaller opportunities that are overlooked by larger distressed funds. The third is really like niche strategies. So this can be really also more esoteric strategies, litigation, finance, or insurance-linked securities and side pockets thereof, or funds in difficult geographic areas like in Africa.
Next to a holistic understanding of the actual distressed assets, one of our key strengths is the structural understanding of different investments beyond the asset itself. Challenging each other, especially in our field of activity, is of utmost importance. We also want that to be a quality in the people that we hire.
We've been in the industry now with an exclusive focus on illiquid assets, and especially in Switzerland, people know that.
The function of Multiplicity Partners is really to provide liquidity in those niches where there is not much of a secondary market yet. And I think it's very important to reflect about our core function in the markets. We do not want to compete in the crowded areas of the secondary market, but really close those gaps that there are still.